one of the items coming out of the budget presentation that I want your reaction to specifically is that they're finally implementing the increase in the junior market cap. So $750,000. What is this going to
750
mean?
million.
Sorry, 750 million. What will this mean for the market? Like what are the next steps? How are we going to see this play out?
What I'm waiting to hear or actually see is the actual amendment on paper. And the reason being is that at the end of Dr. Clark's presentation, specifically to the junior market, someone asked, how would that be applied? And Dr. Clark said new listings. So I'm waiting to see, what is the final word on that. Because as it currently stands, for those who don't know, when a company wants to list in the junior market, they have to list, or seek to raise, or the shareholders, either the shareholders are seeking to raise, or a company seeking to raise between $50 to $500 million in new shares being issued to the market, in a sense, or shares being issued to the market. As a result of that $500 million cap that exists right now, an engineering market company that plans to list on the market effectively has a $2.5 billion cap set on its valuation, which, results in some companies, at the same time choosing to, be a little more creative in how they list. At the same time, potentially not list as many shares as they want because of the constraint that comes from the cap. So with the increase to the $750 million mark, what that means is that a company, companies that plan to list on the JSE would effectively be able to list at a valuation of $3.75 billion versus, the $2.5 billion cap that exists right now. And what that means is that companies that plan to list will have extra $250 million worth of room of additional equity that they can seek from the market, and in turn, use to grow the company even further. So I'm still waiting to actually hear, what that final framework is going to look like, because it applies only to new listings. That's different from it being applicable to the entire market.
Mm-hmm.
So that's why I'm waiting to see the actual document.
A lot of people will be disappointed if it's only for new listings, and I don't know that that's
equitable. It's not a bad thing either. It's not a bad thing either, Kalilah, because when you check it out right now, I don't remember the specific number, but a good number of companies have reached their 10-year mark. So we should remember that 10 years ago, the last company to have listed in the junior market would have been Nosted Express, which should have been at the time when the junior market tax benefits, were, if in effect, almost kaput. So like 2014 to like 2015, 2016, there were literally no listings. I think Nosted was the only company to have, so Nosted Express would have missed the December 31, 2013 deadline, because back then what happened was, if you didn't list before the end of December 2013, you're only going to get the first 5 years of corporate income tax benefit. You had companies like Derrimon, CFF, MDS, who all sprinted to the end to list before the end of 2013, and they got the 5-year remission of 100%, other 5 years 50% remission. So, a good chunk of companies have relatively aged off their benefits, and the remaining sit are either on 50% remission or are on the 100% remission right now. So, in all honesty, it's going to be a bad thing if it only applies to new listings as well, because at the end of the day, it's going to encourage more companies to actually list on the junior market. And on the other hand, even if it's the case where a company that's still capped at $500 million mark, they can always move to the main market once their tax break is actually no longer applicable.
But why shouldn't it apply to all companies on the junior market? Is that fair for some to be held to 500 while others get up to 750?
So, or to remember that there are two major benefits in the junior market. Well, one key benefit, which is that tax shield that you get to really thrive and expand. So someone kind of puts it in a good, perfect sense. When you're, just a regular Jamaican company or any company, your aim is to limit how much taxes you pay to the taxman, which sometimes means that your company tries to not grow as fast or grow as big because you don't want to pay more taxes to the government. with that tax shield I get for the 10-year period, you effectively seek to go as fast as you can to maximize that benefit and having to pay taxes at all. So once that 10-year tax emission window is over, there is no more specific benefit that applies in a sense. The only benefit that remains of being on the junior market is really just the fact that you pay less than listing fees, you don't pay any fines, but otherwise, after that point, there's no more inherent additional benefits that come with being listed on that market. So even if it was a case whereby, let's just say it applied to all junior market companies and they created $750 million, but say the company needs to raise another form of equity at a later date again, they still need to move to the main market. So we should also remember that at the end of this month, we have Lasco distributors and Lasco manufacturing who will actually be graduating to the main market in short order at the end of this month. And they're probably number 4, 5, or 6, because the 3 Lascos at the same time. So that they're the original stock companies, at least on the junior market back then, and they're graduating.
Well, David, I would think the benefit, the advantage would be that you would have more room. You'd be able to raise more money while still maintaining the benefits, the tax benefit of being on the junior stock market. As still Levar saying, can we expect to see more APOs, which is what I would expect to see if indeed this applies to everybody. Now you have an opportunity to raise more money and still be on the junior market.
No. So Kalilah, I'm pointing out, remember, as I pointed out a while ago, after the 10 years is up, you don't have additional benefit anymore.
So, yeah, but there are lots of companies that are new on the junior stock exchange as well.
No, I agree. I agree there. So don't get me wrong. I'm just waiting to see how it is going to be applied, because it could easily be retroactive up to, let us say, 2014, so that companies that would have just, edged out, or just had their remaining tax remission benefit, expire, benefit from additional space to raise equity. So as I said, I'm going to see what the final paper does come out to be, because that's like I mentioned here, we're going to raise the same 50, and then someone asks a question and he give a response. So I'm going to see what the actual final Tax Amendment Act is going to say before we fully debate on this a little further. But as I pointed out, it's been applicable to all companies. We definitely give them more space to raise more additional equity capital, especially considering the high interest rates environment we're currently existing in, which would be a great lifeline to some companies. But at the same time, it still means that more companies are going to see the junior market as an attractive route and choose to actually list on the JSE as well. So apart from listing companies benefiting from this increased threshold, in a sense, it's a great thing to see more Jamaican companies actually come public, and for the ordinary Jamaican to get the benefit of owning an interest in growing Jamaican businesses. Because whereas in the USA you have a plethora of businesses that you can potentially choose to invest in Jamaica, we're just still at about 100 companies, and not all those companies are Jamaican either. We'd have seen a couple of companies go parity over the last decade or so, but still, it still stands the fact that we need more companies in the junior market or on the JSE overall. And if it's the case that the junior market is that avenue for persons to come and list and then potentially go to the main market, so be it. End of the day, this is great, for business overall, not specifically to the JSE alone.
We have a question, another question from IG. Once this is in effect, do you think it would lessen IPOs being oversubscribed or not to a large effect?
It all comes down to the company as well, because if the company makes sense and people really want and to have the shares in that company, you're still going to have that oversubscription, because even when I think back to Dollar's IPO back in May/June 2022, they were capped at the $500 million mark, which was the amount that offer was capitalized at. And even if it was $750 million, Dollar still got over $4 billion worth of applications that came in. So even if it's 750 or 500, if the company is very hot and people like it, they're still going to apply, and the magnitude of the oversubscription still comes down to the company's growth prospects and what they bring to the market. And, you know, that's really influenced as well by, you know, the overall macroeconomic environment, you know, whether rates are high or persons are seeking, you know, to really get higher returns. But at the end of the day, oversubscriptions, you know, will be a common thing that will continue going forward, depending on, you know, what kind of company bring to the market and, you know, what do people actually see. Because I remember back in December 2017, Usinko was seeking $6 billion and they got $18 billion in a week. And that's, you know, when the market was still burgeoning and getting more and getting bigger. So end of the day, a larger dream market cap, you know, will, you know, incentivize more listings. The oversubscription part will really come down to that company's value proposition to the market and potential investors.